In this video, we are going to talk about the secular trend of the stock market. We'll discuss S&P 500 on secular trend because it's very important to understand. Although making money in the stock market could be very simple process, but our own emotions come in the way and we are not able to make profit out of the stock market. I'm talking about majority of the people are not able to make it. I have received a very interesting comment on the channel, and I am addressing this particular comment on the channel so that it gives a benefit to the larger audience to understand the stock market. Let me first read out the comment. It's a comment from Rob Jones. Thank you. Great video once again. However, I have a worry. If you look at the monthly charts for Nasdaq 100 and S&P 500 and zoom out, looking at the yearly chart makes it even more clearer. However, you can see clearly the last few years, the market has gone parabolic, 90-degree angle. How can it carry on going like this? Please address this question in the next video. It's a very interesting observation by Rob Jones, and let us discuss on this very particular aspect. There are different kinds of trends in the stock market. The one trend is secular trend, which can be found in the frontline indices of any stock market. I'm not talking about only the US stock market, but all the stock market of the growing economy or major economy in the world. One is secular trend, which can be found in any market of the major economies world over, where the market secular trend remains always bullish. I'll discuss the reasons why it happens so. And then there is a primary trend, secondary trend, and minor trend, which are all dealt in Dow theory. So, what are the reasons that the secular trend remains bullish? Number one is the economic growth. The economy has experienced consistent growth over past few decades, which has boosted the corporate earnings and investor confidence. Stock market is the slave of earnings. So long as earning will keep growing, the market will keep growing. The number two is technological advancements. Innovations in technology have driven the productivity and created a new industries contributing to overall growth in the market. Number three could be the monetary policy. The monetary policy of the central bank, accommodative monetary policy including low interest rate, quantitative easing have made borrowing cheaper and encouraged the investment in the stock market. Demographic trends. An aging population has led to increasing in savings and investment in retirement accounts, which often include stocks also, because the pension funds also invest in the stock market. Globalization could be the fifth reason. Expansion of the global trade has opened up new markets for many companies in the major economies of the world, increasing their revenue position. So, top line and bottom line both continue to keep on growing. So long as earning is growing, the stock market will grow because the stock market is the slave of earning. Now let us talk about the top 5 economy in the world in terms of GDP. Number 1 is USA, number 2 is China, number 3 is Germany, number 4 is Japan, and number 5 is India. So what we will do in this particular video, we will go to the price chart of all the indices from these markets to find out the secular trend as to how the market has behaved over the period of time. I'm D K Sinha. Please do not forget to like this video, subscribe the channel, hit the notification bell for updates. Let's begin. Before we go to the price chart, let me share with you some of the historical data. Prior to World War II, there has been higher frequency for market corrections and bear markets. Post World War II, if you see the data of last 70 years, you will find that the frequency of bear market and market corrections have reduced. In last 70 years, on an average, bear market followed every 5.5 years, while the corrections has been every 1.2 years. What is correction? When the market corrects more than 10% from the peak but less than 20% from the peak is called correction. And the bear market is when the market corrects more than 20% from its recent peak. Why market then corrects from time to time? Because market gets overextended, market gets overvalued, and mean reversion takes place in the market so that market doesn't remain expensive all over the time. This is the price chart of S&P 500 index and yearly time frame. So in yearly time frame, it is usually very difficult to capture all the bear markets. However, we can see the data in S&P 500 chart from 1871 till now. The secular trend has been bullish. It is not that the market has not corrected. Market has corrected here, and this is the period which was the greatest correction or the bear market ever in the history of the world in 1929, where the market capital got eroded by over 85%. So this was the greatest depression of 1929, which ended finally in 1932. So there has been a correction, and then the market recovered, took a support at the high of the prior peak, and then market structure became higher highs and higher lows. Then another major correction came here, 1974. And after this correction, again my market went up. Then again in the year 2002, the correction halted, which started in year 2000, which is known as dot-com bubble, and there was a heavy correction in the market, and the drawdown was nearly 50%. Then we had in 2008 financial crisis, which was a very big crisis, and the drawdown was around 55%. But there is a single candle because we are looking at the yearly price chart. So this trend line is still holding good. Price has taken support here, price has taken support here, price has taken support here, price has taken support here. So in next correction, we expect whenever market comes into the bear market, ultimately bull market and bear market are a cyclic phenomenon. Ultimately market will correct somewhere down the line. So it is expected that this trend line will act as a dynamic support. Now this trend line, since is a rising trend line, which means market is likely to make much higher level when correction takes place. And EMA 21, you see here, price has taken support at EMA 21. Here again, it has taken support at EMA 21. Here again, it has taken EMA 21 support. Here too, it has taken support at EMA 55. So we can largely tell that whenever price comes to EMA 21, which is also rising. Why it is rising? Because the market is rising. So moving average will get adjusted on the upper side, and whenever correction takes place and the price comes to EMA 21, probably that is the opportunity to invest in the market. Maybe ETF of S&P 500. Let us have a look towards the 3 monthly chart. This is a quarterly chart. What we can see here, quarterly chart gives a very good picture. Here, the price has corrected, price has corrected. It is not a parabolic rise. Market is making a structure, higher highs and higher lows kind of market structure. On face of it, it looks like a parabolic rise. If you see the recent time correction, the recent time correction here has been to an extent of something around 28-29%, which is not a smaller correction. Yes, overall market secular trend is bullish, and Impulsive wave will always be bigger than the corrective wave, and this is how the market makes a structure which is higher highs and higher lows kind of market structure. Now there was one more query on the channel in terms of the comment. Now if you see here, the comment was that the price, if I join from 23rd October and join next 3 point, this has given a breakdown. This kind of breakdown has taken place. Now, it is better to understand the price action not only on the trend line, because drawing a trend line is always subjective. So, what I'll do, I'll use the price channel. I'm using the price channel to understand the price action. Let us take the reference of the peak. This is the peak where the market is correcting. Now I am projecting it. Now, what is it indicating? Price has taken resistance here, resistance here, resistance here, resistance here. Earlier, the price was trading below median of this rising price channel, and once the median got broken out on upside, what does it mean? There has been an expansion in the price. The moment this event took place here, median fiber has become a support. Price has taken support here, price has taken support here, and currently price is trading quite in proximity of the median of this rising price channel. So this is another evidence that probably the recent time correction which is taking place uh, has almost ended. If I draw two horizontal line here on S&P 500 in this weekly time frame, what does it indicate? Price has taken support here. It was a resistance. So this was a continuation chart pattern, a cup and handle kind of chart pattern. So this zone becomes a important demand area. And if you see the current week candle, which has gap down with a opening price, and then it is recovering. So the price might take support at EMA 21, which is currently it is trading. Earlier it has taken support at EMA 21. Here there was yet another gap down, but the market immediately recovered. We expect the similar kind of price action in S&P 500. Now let us go and check the price chart of German stock market, and this is the price chart of DAX. So this is here the secular trend is bullish. We can see this is a quarterly chart. Price has taken support here, taken support here, taken support here, taken support here. So here the secular trend is also bullish. Each time the major bear market comes, then the price makes a rounding bottom pattern, gives a breakout, and then this level becomes a support, which is quite evident with the price action. So even in the German market, the broader trend is bullish, secular trend is bullish. There has been correction from time to time. Now, if you check the Japanese stock market, this is Nikkei 225 index, and here too we can see the overall trend is bullish. We can see price has taken support here, price has taken support here, price has taken support here. Now the Japanese market is also trading almost at all-time high, and this is a major rounding bottom breakout which might push the price to much higher level in Japanese stock market, that is Nikkei 225. Now let us check the Hansen index, which is nothing but the reflection of the China market. So here we can see the price has taken support here, price has taken support here. We can draw another trend line. Price has taken support here, price has taken support here, price has taken support here, price has taken support here. So price is now bouncing from a critical support area. So here also the secular trend is bullish. It corrects, but ultimately makes a new high. Let us now take the Indian stock market. This is the grand old index of Indian stock market, Sensex. Now here too we can see the secular trend is bullish. It is price has taken support here, taken support here, taken support here, taken support here. So this is a rising trend line. Whenever the correction comes and it is taking support, it is looking similar to S&P 500. If you see the price takes support at EMA 21, and then makes a new high. So correction takes place, but the overall trend in the market is extremely bullish and secular trend remains bullish. So what is the primary trend? This is the primary trend. This is the primary trend, this is the secular trend, and what is the secondary trend? This is the secondary trend, which is a reaction to the primary trend. So our focus should be on secondary trend, in fact, to initiate our investment, and write the trend on the basis of primary trend of the market, which will help us to generate wealth and grow our capital. So what is the conclusion of the today's discussion? Number one, the secular trend of all the major economies of the market are bullish. Secondly, it is very difficult to capture the bear market or major correction in the stock market if you look at the yearly chart. For example, if a bear market is started in the mid of the year and bear market has ended in the first quarter of the upcoming year, then it is very difficult to capture the price action of the bear market. So largest time frame should be monthly or at the most quarterly chart. Most important trend is primary trend, where we write the trend with our investment, and the secondary trend helps us to time the market to buy the stock, or for that example index ETF at a value zone. So there is no parabolic rise in the market, and market has corrected multiple times. In the recent time memory, it corrected heavily in the year 2000, where drawdown was nearly 50%, which is known as a dot-com bubble. Then it was in 2008, there was a heavy correction, and drawdown was around 55% to 56% from the peak. Then we had seen in year 2020, where the drawdown has been around 35-36%. Then year 2022, very recently, the S&P 500 corrected around 22-23%. So there has been a frequency of bear market which comes in the way, and whenever the price gets overextended, the price will correct. Mean reversion is a normal process in the stock market. What is your opinion about the stock market? We discussed the top five stock markets in the world, of the top five economy in terms of GDP. What is your opinion about the stock market? I'll be expecting your comments in the comment section of this video. Thank you very much for watching. Looking forward to meet you very, very soon.